Joining us now, we've got Michelle Snyder, who is the MarketGauge.com chief strategist. Michelle, great to have you here with us. So let's break this down and the setup from Amazon that you're seeing coming into the earnings reports later today.
Well, as far as Amazon goes, I mean, from a consumer standpoint, as much as I almost hate myself for doing it, me and clearly millions of others are using Amazon because it's still really not only the most reliable place to get goods, but also one of the cheapest place to get goods. And so I don't see any reason like Costco, which has done very well after reporting and now is trading over $1,000, that Amazon can't continue. Of course, what would stop that would have to be something really drastic like major recession or what have you. But I don't see that. So for now, I'm not in Amazon, but I do definitely would not be bearish. And we could have a situation like we've been seeing in some of the other earnings where they beat and then it actually has an opposite reaction and the after hours being down and then turns around the next day. I wouldn't be surprised, but probably be a good dip buy if it happened.
Mish, what do you think of the valuation concerns when it comes to big tech? Obviously, profit growth is slowing, expected to slow even further here in the coming quarters, putting into question some of those lofty valuations that we do see across the board when it comes to big tech. What does a reset of that potentially look like?
Well, we've heard a lot about CapEx, right? The capital expenditures going up, which of course always hits the bottom line in terms of profits. And that's been the classic example of the earnings being really, really good, the guidelines for the future still being good, but yet also the capital expenditures also rising. And that's why we're seeing some volatility in those stocks. So I'd say for me personally, it's one thing if people are already in position, but that is not really where I think the money is to be made right now. We can just see that reflected in the price and the overall broadening of the market into other areas that I think is pretty exciting and probably more worthwhile in terms of profitability and percentages of rising prices.
If there is perhaps this ability that investors are looking for in order to relieve some of their dependency on this long Mag 7 trade, where are the first beneficiaries elsewhere in the market?
Well, let's talk about commodities because it's not talked about very much. I heard Jared talk about copper, so that's certainly a commodity, and that's something to be watched. We have had a spectacular run in gold and silver, and even though they're relaxed a little bit here on the opening, the potential, particularly from now, a supply side in gold with miners going up, presents an opportunity. We've been seeing it in food prices with corn, soybeans, wheat, all looking like they're basing out. I'd probably stay away more from the energy space. And then sugar, I look at that not necessarily as an investment, but as a barometer for what could happen in terms of inflation and rising food prices in the future. And that's also popped up pretty significantly, flirting with around 20 cents a pound. So that's one area. But then we also have to look at my Modern Family, which I'm excited. They're happy this year. Small caps, IWM is outperforming. We're looking at the retail sector. It looks like that could actually, whether it's beyond staples or consumer discretionary, which has been weaker, could also really participate and is already participating. I know we have sentiment tomorrow. Biotech has relaxed a little bit, but there's been a lot of areas in there. Transportation's been the weakness in the family, and I think maybe unless that really accelerates to the upside and gets back over, if we're looking at IYT 70, could be the little sticking point in the euphoria that we're seeing in the Modern Family. But yeah, those are broadening.
When it comes over to small caps and retail trade and some of the other broadening out that you were just talking about, doesn't the tariff story, doesn't that put that then at risk?
Absolutely. But one thing I've learned this year, and I learned in 2017 as well, is that you have to follow price because the price is going to dictate the narrative. So yes, tariffs are scary, but if you're looking around at certain things, they're going higher in spite of, and some aren't. So I think to be safe, we want to look at things in terms of whatever it is, whether it's small caps or retail or what have you, but that's more U.S. centric. And I think that's really what the market's trying to tell us here. So that's why I'm broadening out. If I'm looking at biotech, and I was watching before when you had the gentleman talking about Eli Lilly, I'm looking at the vanity trade. I'm looking at Novo Nordisk and AbbVie in that space. If I'm looking at the car space, I'm looking at Rivian because it's in the United States. Even Ford got crushed, but Rivian's still holding up well. We're looking at AI. I'm still looking more at the software side and even the quantum computing side. So you have to, this is a stock picker's market. When people say that, it's true. And the key, Shauna, in that is really to look at the chart setup. If it's accelerating in the uncertainty, then that's a good sign.
I'm Michelle Schneider. Always great to get your insight. Thanks so much for taking the time to join us here at the Open.